Can you invite Mark, Hans, and Jake want? So Eridanus and Kenton.
Yep, just invited them.
GM.
Yo, GM.
All right, we're good to go. How's it going, everybody?
Great. Excited for the first spaces of the year.
Oh yeah, that's right. Happy New Year.
Happy New Year, guys.
All right, Pluto, you want to get us started, kick us off?
Yeah, sure. I think the thing that I'm most excited about is the launch of Base, which over the holidays we started doing StageNet testing. Rolling this one out was a little bit it was interesting because this is the first kind of uh new chain that we've launched. Well, first of all, the first new chain we've launched in a year. So a little bit like, rusty touch and go on the rollout. It was interesting because this was the first launch where we encouraged people to use an RPC provider rather than using their own daemon. The main reasoning for that is that when it comes time to roll out Solana, um, it's unlikely that every node operator is going to be running their own infrastructure since it's like around $2,800 a month to run the infrastructure for a Solana full node and the geyser that will be necessary. So basically we wanted to get people familiar with the process of selecting an selecting an external RPC provider and using that and configuring that with their Thor node. So there was a little bit of like pushback and friction around that. Some of the node operators were upset that we didn't have an officially supported base daemon, since in the past we've just made it super easy for node operators to run all the infrastructure. But if we're going to meet our goals of this year to roll out 12 to 20 new chains, there's going to have to be some degree to which node operators take more responsibility for the infrastructure side of things. Like the team simply can't support, n number of chains times 120 daemons, 120 nodes worth of daemons. Um, it's just something that like it's just not possible to just make it as easy as running two commands to spin up all of the infrastructure required to um, observe transactions on like 20 different chains. I mean, that's basically like what Block Daemon or QuickNode's whole business model is, and those are like $100 million VC backed infrastructure companies. Like running infrastructure is hard, and so we just have to like figure out how to make level up the node operator community to make it a little bit more, it's kind of more choose your own adventure. Node operators need to understand that, the goal is to roll out chains as quickly as possible this year. And so, that might mean some of them running daemons, some of them using RPCs. Um, and so there was a little bit of sort of pushback on that philosophically, which was a topic of debate earlier this month. But the base rollout from a technical perspective was successful. And we had the pools created. So the base ETH pool got created, the router got created, and then yesterday the Treasury seeded $800,000. Do I have that right? Yeah, $800,000 worth of liquidity into the base ETH and USDC pools. There was some discussion as to whether the Treasury should seed the CB BTC pool, which I would be in favor of, just because THORChain has the opportunity to provide a native BTC to base CB BTC rail, the same way that it currently, and we see, pretty consistently. I think I saw the other day, people swapping with like 99.9% price execution from WBTC on Ethereum to native BTC. So those sort of wrapped to native BTC rails, I think, are a key differentiator for THORChain. And so the CBBTC pool would definitely be good. But there's also sort of like the overarching question is like, what's the best or most effective use of THORChain treasury funds? And we can also talk about, reallocating some of the existing treasury LP funds away from certain pools and into other pools. So there's just, yeah, I mean, that would have to happen via formal governance though, because the treasury LP positions are locked into a module that's only controllable by node governance now. So I think that would be something to look forward to this year, is perhaps figuring out a way to get more community involvement in the distribution of treasury LP, and find a way to potentially, I mean, I think, like, I don't know if, like, maybe delegate like a subcommittee or like a DAO to basically allocate treasury LP, but find some way to give the community more control over, where the treasury LP is delegated to, so that we can, figure out where it's going to most effectively be, deployed. So, but in the short term, I think maybe we'll petition the Treasury to add liquidity to the CBBTC pool. I would love to see Coinbase or the base team stepping up to provide, perhaps, via like a token swap with THORChain. But it would be cool to get that pool up and running. So yeah, base is live now. I was just looking at some of the fees. Where our outbounds are like $1.37, which is a little bit too high. So we're gonna look at tweaking the gas on the base outbounds. But other than that, I'd say the rollout is complete, and I'm looking forward to seeing more of the L1s, or sorry, more of the dexes supporting it. I saw there's already a couple wallets that are processing swaps. Gem Wallet, which is a relatively recent integration. FamiliarCow, do you know when they integrated? They kind of just like appeared.
Yeah, it's in Q4 through SwapKit.
Amazing. Yeah, it's awesome. Like nowadays, we just see new integrators. Obviously SwapKit does a lot of business development behind the scenes, but it's really cool to see, like, just an integrator just turn on new routes and start processing swaps without us needing to bother them.
Yeah, so we're
Um,
still waiting on other front ends to go live to actually make quote unquote official announcement that Base is live, because it looks like it's not live on ThorSwap, it's not live on Shapeshift or anywhere else. So we let all the integrators know that Base is live and ready to go. And yeah, it's ready in the back end. We just got to get the interfaces to turn it on, and then we can actually start promoting it and start working with the Base team to actually just make it more widely known and get some integrations done, and yeah, hopefully like lever this into more integrations that we really want to get.
Yeah, I do see that there are several base swaps here with the Shapeshift and ThorSwap affiliate names in the memo. So it looks like they're already testing that on mainnet. So we should see them roll that out pretty soon. Ideally, they would be a little bit more proactive in the future and get that going on StageNet so that it can be released on day one. But everyone moves at their own pace, and the dexes that are quickest to integrate will be they'll just be providing the best user experience for their customers.
Yeah, and as for liquidity, we are talking with some people to provide liquidity for like all these pools, including CPBTC. But basically like these entities aren't current, like they're not current THORChain LPs. So there's some kind of learning curve to actually get them on ramped and get them familiar with the product and actually getting it shipped. So like maybe like it's a little difficult when we're just bootstrapping the pool from zero and they're not really familiar with THORChain and like things like that. But yeah, so those kinds of things will take a little bit more time, but that's obviously like stuff that we're working on in the background.
Yeah, it's definitely a much easier sell now for institutional liquidity partners because the liquidity model is much more easy to understand without synth leverage. So there was an overwhelming support in the community for the idea to launch base and all new pools without synths. So disabling savers, deposits, and since swaps to synths are disabled, that effectively means there will never be any synths minted into the base ETH or any pools, from this point forward. And so that was overwhelmingly supported by the community, and it seems like that will stick. So yeah, I'm just excited to see how these pools perform when they're sort of reverted to their more traditional, AMM principles, and we should see, a lot less, um, a lot less impermanent loss due to the reflexive nature of synths with these pools. So if you want to get sort of the THORChain classic dual LP experience, um, consider base pools because they won't have any synth leverage. Same thing with Solana and every other synth moving forward, or sorry, every other new pool moving forward. As for the pools that are currently have savers in them, like Bitcoin, Ethereum, etc., um, there's no current plan to do any sort of, there's no current plan to wind down the savers program in sort of a abrupt or premature way. Um, Deposits to those savings pools are closed, so we should stop seeing the synth leverage grow from this point forward. And those pools are only in withdrawal mode now, from a savings perspective. So hopefully savings just sort of naturally becomes a lesser and lesser percentage of the pool, and the synth leverage gets reduced over time. And as we see more integrators come online and more volume ramp up, we should see, the APYs on those pools attract more dual LP, which will then decrease the synth utilization and until it's essentially, nil. So at some point, it'll be a combination of both, withdrawals on those savers pools over time, and an increased amount of dual LP that will essentially make the percentage of synths to non-synth liquidity ever smaller. So that's the plan with savers. That program is effectively sunset. So anyone who's currently in a savers pool will continue to earn yield on those. It's like well, right now for Bitcoin it's almost 0%. For Bitcoin Cash it's like 0.04%. So as synth utilization increases, there's a function that decreases the amount of savers yield. And the idea there is to stop incentivizing people to deposit, but there's no longer an ability to deposit. So that's the plan with savers for right now. That's what the node operators kind of signaled that they wanted to do. And so, yeah, that's how we're going to wind down the savers program. Just let people withdraw and continue to earn yield. But other than that, the only way to provide liquidity on THORChain now is via dual LP. We can talk about the sort of lending debacle real quick. Um, there was really, I mean, that was not an ideal way for that to have been done, using the admin Mimir key. I saw somebody already asked right now, what's the timeline for removing the admin Mimir key? That will be removed in the next version. For anyone who didn't catch the drama, which I'm sure everyone here did, um, I think last week, I think it was last Thursday, um, and admin Mimir essentially took an action to unilaterally pause loan redemptions. This was quickly debated and reversed by the three nodes. So there's certain there's different tiers of of governance on THORChain. Just to catch people up real quick, the admin Mimir key exists still just to give like a really rapid response in the event of any kind of like critical security issues. um, the node Mimir has the ability to they can always override the admin Mimir with a 2/3 majority, but there's a different category of Mimir, which is operational Mimir, which any three nodes can pause certain aspects of the network, like trading on certain pools. So anything like that's deemed to be operational can be overridden by a simple majority above 3 votes. So, for example, if 3 votes noticed an issue, with trading on a specific chain, they could like pause, AVAX trading or whatever with 3 votes, and then 4 nodes would need to vote to unpause it. So anything over 3 votes is just a simple majority. And then any of the economic Mimirs, things like the emissions schedule, or I don't know what's any of like the loan parameters, or synth parameters, like those require a full 2/3 majority of nodes to vote for it. So anyway, JP, so you guys saw JP Thor posted that that he was pausing loan redemptions and savers withdrawals. Both of those actions were reversed by node operators, and it's just basically triggered a furious debate within the community. I think anyone who's paying attention in either Twitter or Discord has seen a ton of just noise about that. It did trigger a bit of a mini bank run, or rather like accelerated loan redemption. And over the last week, we've seen 22% of all of the collateral uh, uh, withdrawn. So people paid back their loans and have withdrawn 22% of the Bitcoin leverage. Sorry, Bitcoin loans. So that's like a quarter of the whole lending program is already gone off the books. Liabilities cleared. And the broom price has held up pretty well. So to be honest, I don't think that there's really anything else that needs to be done. The system has proved that it works. That it's been able to basically tank a quarter drawdown in all of the collateral in the system. And there's the only way that basically loans have already been paused, new loans have already been paused. So all that needs to happen now is we've already seen the loan redemption rate slowing down as the FUD has started to clear out. I don't think that there's been no loan redemptions in this workday so far for me. So the way I'm looking at this is like the immediate action of an admin pausing loan redemptions created FUD. It was basically it was like magnified on Twitter, and then a lot of people started closing their loans. But we've seen those start to level off, and Rune is still chugging along. So from my point of view, there's nothing that really needs to be done. I mean, we just continue to allow people to redeem loans at their own discretion. We remove the admin Mimir keys, and yeah, THORChain survived a major stress test. And I mean, there's going to be probably some people that propose different things in in Discord and via, ADR to make changes to the system at this point. But I would probably, I would recommend that nodes not vote to change anything, because that is the thing that got us into this problem in the first place, is people saying, "Oh, we should change this, we should change that." That just creates an incentive for people to close their loans if the rules of the system are changed. So my recommendation is, like, I can't prevent people from opening an ADR, and the team will basically follow the protocol to, open the commentary period and then vote on the ADR. But my recommendation for the community and for the nodes is not to entertain any changes to the lending protocol at this time, and just let the program run its course, let it naturally wind down, so that we can focus on, the rest of the roadmap.
Yep. I just want to echo that that's also why the lending protocol was rolled out with caps in place, in very rolled out in a way that we knew wouldn't scale too large for the network itself, and also has like circuit breakers in place to make sure that we don't get to a point where it actually affects anything like swaps and other critical functions for the network. So yeah, with like things like the circuit breaker, it seems like the only thing to do is to just let lending play out as it is, and let the mechanics that we put in place play out, and not alter things too far. Is my opinion, at least.
Yeah. Someone just posted a someone just posted a link to a dashboard saying greater than 36% of all loan value redeemed. So I mean, in my opinion, THORChain absolutely tanked that. I mean, if that's not gonna kill it, I don't know what can, honestly. I mean, so yeah, just let it. Everyone's just been. It's been a hell of a week. I mean, there's been so much noise in Discord. I think it's the longest Discord thread I've ever seen. It's like 5 or 6 thousand messages long. But honestly, I'm just gonna focus on delivering EDDSA, which is a prerequisite for Solana. Just keep focusing on the Solana. Work on, doing our best to make the base rollout successful. And then everything else that we have coming up too, which I think, yeah, that's probably a good segue to talk about, now that hopefully that's all behind us. Yeah, we can talk about what's coming up for 2025. But yeah, just as the last parting thought on that, the action was a misuse of the admin Mimir key. The admin Mimir is being burned forever in the next release. And going forward, the only way that anything can be changed on that scale is via full 2/3 majority node governance. So yeah, that should never happen again. And that ideally would not have happened in the first place. We should have
Yeah, so
just gotten rid of that key a long time ago.
yeah, so now this actually brings us to the point where we completely get rid of the admin Mimir key, and the network is entirely reliant on the node community to make any kind of changes to the network. So there's, going forward after the next release, there's no more admin key at all, and it's only the nodes who can affect any type of parameters in the network. Even though we've scaled back the admin key a lot over the years, and put a lot of protections in place to make sure it couldn't be abused. Like, this is the final hurrah of the admin key. It's gone forever after the next upgrade, and within like a couple weeks.
For sure. Cool. So maybe Jack, maybe I don't know how much time you have, but do you want to give a preview of what your team is working on in 2025, and then I'll kind of round it out with
Yeah,
discussing the base layer stuff, and then we can move on to the app layer towards the end.
for sure. Just to start off, I'm super excited about where we're going with THORChain. I think that, you know, if you look at the FUD cycle, THORChain has weathered everything, and this particular event will be nothing new moving forward. I don't think. The fundamentals remain sound. The trading continues. The chain is stable and moving fast, and I think that the THORChain development community and team right now that you see represented on this call is stronger than ever. and candidly also more united than ever. I think that there's been a lot of chat even on this call about disagreements over previous implementations of the lending products and stuff like that. Everyone knows we're all rowing in the same direction right now, and I think that's a huge asset to the protocol. That being said, what is StrangeOut's role in that? We're here to drastically accelerate all the efforts of the other teams. So we're trying to make um, refactors and code additions that help ease integrations for folks like Hans, who's down here on this call, and the Kujira team. Helping enable what they're doing up on the Cosm Wasm and app level is critical to the growth of THORChain moving forward, and we're super excited to help play that role. And but in terms of sort of like immediate term deliverables, Strangelove, the next 6 chain integrations, we're going to try to crank those out as quickly as possible. We're also doing a major refactor of the Bifrost code on the THORChain side to help ease burden on the validators and reduce the number of transactions that need to go over the network by utilizing Prepare Proposal, in helping to make the chain faster. And then also we're going to work on decreasing block times, first down to 3 seconds, and then hopefully down to 1.5, 2 seconds over the next few months. And then I think we do have a couple other performance things that we're working on. But I view our core role here is to help accelerate the work that all of these other teams are doing. Our expertise is on the platform and on the bridging side of things. And what we've always tried to do is help stabilize and make sure those things support whatever needs to be done on top of them, and then get out of the way as much as possible. And that's what we're going to do in THORChain. Just continue to push more and more integrations, get those shipped as fast as possible, and to get out of the way and let the teams do what they do best.
Awesome, dude. Couldn't be more stoked to be working with you guys. You guys provided us with the important capability of being able to do the coordinated upgrades, which has allowed us to rapidly upgrade the Cosmos SDK. We were using a really old version, and so like that unlocks the entire app layer, which is going to be a big part of the strategy for THORChain in 2025 as well. So maybe we can get either Mark or Jaquan or Hans to come up and kind of just talk through the community, and I would just love to kind of get that kind of clarified for everyone, because I think there's a lot of questions as to like what is the app layer, and how does RUJI fit into the picture, and how does it benefit the base layer. Are any of you guys available to come up and speak?
Yeah, we're here. I don't know if you can hear. I see Jaquan also.
Yeah, go for it, Mark.
Yeah, so Hans has been cooking like there's no tomorrow. I'm actually sitting here in London with both Hans and PM. So if anyone is in town, we have a meetup on Friday. So don't be a stranger if you have time to swing by. But yeah, so things are chugging along. There's a big lift in enabling Cosm Wasm on THORChain, as you mentioned already, Pluto. Meanwhile, Hans has been preparing all the contracts, starting with RUJI Trade and RUJI Pools, also known as Fin and Bow on the Kujira side of things, which will be the first products to go live. We're finalizing that, and then also with the auditor, anything that we do, anything that we launch is going to be audited to be safe for the users. Are you okay hearing me, by the way? There's a lot of airplanes and traffic. That's
yeah, there's a little
London.
background noise. Yo, one question that I have for you guys that would be great to answer. So like, some people like, can we just like take a step back and say like what it is that the app layer is, what you guys are building at Rujira, and then basically like how does that impact the base layer? Like what benefits what does THORChain get from the app layer essentially? Like, I just want to hear the case for the app layer.
Yeah, so I think the examples of what's happened on lending and savers recently is a good example of why we need the app layer to go live as fast as possible. When you de-risk the base layer, move a lot of these features, functionality, these contracts onto the app layer, to do all kinds of things. THORFi has limitations on the base layer, and we can do a lot of stuff on the app layer. I see Hans, he wants to contribute onto that, but essentially de-risking the base layer, removing all this functionality, and really bringing THORChain into the world of true DeFi. All the things that we know from Ethereum, Solana, we can do on the app layer. But yeah, I don't know if you want to add anything to that, Hans.
Yeah, I will. Sorry, there's more road noise, and as Mark says, right opposite him. The thing that I think is really amazing about the THORChain app layer compared to any other kind of like smart contract ecosystem is that protocols that deploy on the app layer are incentivized and should be mandated almost to pay fees to the base layer, to pay for security, to pay for their existence, right? So there is a direct benefit there to Rune, to bond providers. But what's amazing about it is that you deploy once to the app layer, and suddenly your apps are now available from all the currently connected THORChain layer ones, and not just the layer ones today, but when Solana gets added, and when the next chain gets added, and when the next chain gets added, the business development case to Ripple, right, is that, hey, we can give you this entire financial suite, which ultimately will, for those here, will benefit Rune holders, generate fees for Rune stakers. We will, that entire app suite is now available to your chain, and all you have to do is integrate with THORChain, and you get the swaps, and you get everything else that's already there.
That's a really key point, I think, that might be lost on some people. So in a traditional, smart contracting platform like Ethereum, you deploy your smart contract on Ethereum, and then you have to sign a transaction on Ethereum to interact with that smart contract. What you're saying, Hans, is that you could sign a transaction on Ethereum, Cosmos, AVAX, Binance Smart Chain, Solana, name it. You could even use a UTXO chain, and you can call directly into a contract that's running on THORChain, and you can interact with liquidity across any of those chains as well.
That's exactly it. And somebody might say, "Oh, why do you need a smart contracting platform for Ethereum?" It is literally a smart contract platform. But where else could you deposit your ETH into a lending market and borrow BTC against it into your ledger live? It's just like it's just a completely different paradigm. And each chain that adds the network effects, adds the TVL, adds the fees, and adds to those kind of fees generated for Rune holders, for bond providers, for everybody.
So really, THORChain is just the execution environment, but really we're connected to liquidity across the entire crypto ecosystem. And that's not something that any other chain, any other app chain, any other L1 is in a position to offer anything like that.
No, completely exclusive. And this is what was when we started building out the Cosmos integration, and kind of inside the THORnode code base. And then okay, right, so we need to get this asset, and suddenly you're working with this observed transaction object, and the entire stack below it, all the multi-party computation, all the specific signing algorithms is completely taken away, and we can now build this thing that just integrates directly and seamlessly with every single layer one that THORChain is connected to, and it's just, yeah. I mean, I've been in this space for a while, but this particular thing has just blown my mind.
Awesome. Yeah, I think the number one thing for us, as Nine Realms, being like sort of the advocate of the base layer of the of Rune, really is like, how do we align the incentives of Rune and Rujira? And I think that's something that's going to be sort of a big discussion that's going to play out over the next coming weeks and months as the app layer goes online. I'm just interested to hear how you guys are kind of thinking about, the question of like fractured liquidity, for example, because we already have liquidity pools on THORChain. So what does like Rujira Trade offer that the base layer does not?
So this has been this is actually I'm very excited by this. and no part of what we want to deliver on the app layer should cannibalize anything on the base layer. It should, and
not.
equally,
It should not.
should
right?
not, absolutely should not, right? It should be complementary. It should drive volume and revenue through the base layer, and then provide a value add where the app layer can. So, like, kind of one of the biggest selling points when this all kind of started was that there was this, you know, massive amount of base layer liquidity that we could tap into for RUJI Trade, which is an order book exchange. You know, it's not it's different from the swap protocols of the
Right.
base layer.
THORChain is an AMM,
Exactly.
and you guys are
Exactly.
building an order book. I think one of the coolest things is that if you can bootstrap an entire order book, basically using the AMM curve, because an
So this is
AMM, yeah,
well,
go
this
ahead.
is exactly what we're doing. What has been the biggest hurdle here is the fact that correctly, THORChain doesn't execute a swap until end block, right? So you obviously, for those that are listening, you have a bunch of transactions in a block, and actually your account doesn't get those funds back if it's a single swap until the next block. And so when you're writing a smart contract and you say, right, I'm going to execute an order against the base layer liquidity, you can't make it atomic. You can't guarantee a user they're going to have their funds back in the same transaction. And so if you're trying to execute a transaction against a limit order and split it between partly on a limit order because there's a good price there, and partly against the base layer, you can't guarantee the price execution. And so we've kind of been around the houses a bit with this. And the current, on Kujera currently, we have a Fin, which is the order book, where you place your limit orders and somebody else can come and take them. And then we have Bo, the market maker, which has to actively take funds, move them into the order book, and place their orders to say, right, I'm happy to buy and sell. And they'll use that XYK algorithm to define their pricing for that curve. Which is it's suboptimal because every time that an order gets filled, the market maker then has to be cranked. It has to move those orders around and replace them at the right place in the book. What we have done with, and what we were planning on doing earlier this year anyway, but what has really accelerated it is we turned that active market making into what we're calling passive market making. And so instead of the market maker having to place those orders in the order book and say, this is what I'm willing to buy and sell for, the order book is now querying the market maker and says, what would you buy and sell at this price for? Like, what size would you give me at like 1% over the current price or 2% over the current price, whatever, right? And so it's not the market maker is only required to have those funds when the trade is actually executed. And so what that unlocks, it unlocks this kind of a market maker, which we're calling like an arbitrage market maker, which fundamentally is powered by the base layer pools. So when the order book asks the market maker, what will you buy at this price and what will you sell at this price? The market maker could query the base layer pools through the integrations in Cosmosm and say, how much could I buy and how much could I sell at this price? And then it returns just a query response and says, right, this is my quote. So suddenly your order book is backed fully by the depth of the base layer pools. And all the market maker has to do is have the funds temporarily until the end of the block to settle that transaction, which we will provide through the lending market. So it's a bit like a flash loan, but not really a flash loan. It's a privileged action. And so what we're doing in all of it, to kind of come back to the first point here, we are the order book becomes almost like an on-chain intent solver. So it has fixed price limit orders that we all know. We have a different category of limit orders, which are called Oracle price limit orders. So you can buy at a discount. You can say, I'm willing to buy at 10 bips below the Oracle price, or sell at 20 bips above. That Oracle price is read from the Tor price in the layer 1 pools. And so what Fin is doing is it's an intent solver that solves across the fixed orders, the Oracle orders, and this passive market maker in order to give somebody the best execution possible on the app layer. So, like, long story short is that you have an execution environment or a trading environment where people they can place limit orders, and they're allowed, you can guarantee an execution price, but it also is supported by the base layer, routes as much as it can through the base layer, pays the base layer fees, but also gives us an opportunity now, instead of having an active market maker that has to move funds, and therefore, you wouldn't have, if you're going to have multiple order books with the same base asset or the same quote asset, you'd have to split the liquidity. We can now take the base layer liquidity, virtualize it in all these order books, and provide an ability for people to place limit orders, to buy and sell on almost any pair. So we can quote everything in every flavor of USDC. We could quote everything in E, and you wouldn't have any reduction in liquidity available. And the whole thing is supported by the fact that we're living on top of THORChain, on top of the base layer pools, and routing the swaps and paying the fees back down to that base layer.
That's amazing. And right now, today, the way that, the distribution of THORChain takes place is through basically the quote API that is built into THORChain. So when you ask THORChain for a quote, it's just looking at the liquidity pools using the, Y equals X times K and giving you back a price less any, outbound fees and liquidity fees. Um, the way I can kind of see the distribution for the app layer playing out is that they will sort of start off distributed fundamentally different, right? We have this user base of tier one integrations like Trust and Ledger, who, we have a very predictable user experience. We have very predictable pricing and execution on the base layer. We don't want to really muck with that at first. Um, you guys can essentially build your own UI to basically prove out this fundamentally new capability of virtualizing base layer liquidity into an order book and doing market maker and passive liquidity. All that's well and good. You guys can build that sort of user experience and kind of show how this new paradigm is better. And then I can see us eventually then pushing that down into the base layer, or just simply switching out the plumbing, so that now when you request a quote, if we can indeed give a better price and better execution using, Fin, which is using both the base layer and the app layer, we could just start, basically we could be A/Bing that, to certain integrations. So we have a lot of ability to kind of control the rollout of this, and do it in a controlled way so that it doesn't interrupt any of the existing base layer integrations. But again, I see that being something that can happen, in stages, as these different apps start to get proven out. We then sort of bring them back down to this to the base layer integrations as well. Does that kind of make sense?
Yeah, I think so. Yeah, I think the key word in a lot of that is proving. It's a proving ground almost. It's a safe space where you're, because the only ability for an app layer smart contract to integrate with a base layer is through a memo. There's no privileged access that smart contracts have that an individual user doesn't have, and no way that a smart contract can behave in a way that an individual with a legal contract and multiple participants couldn't also behave. So it inherits the same security properties. And if things start to get proven out and things are effective, then really, because it's part of the same node, the same consensus engine, the query endpoint in SwapKit or in the kind of these integration layers could be, you just switch it out. You make a Cosmos and an app layer query instead of the query to the base layer, but in your integrating code, you're calling a function on a JavaScript library. So it's exactly as you say.
Cool. So yeah, let's talk about though, because I'm seeing some questions in the comments here, um, about RUJI affiliate fees. How does this bring value to Rune? So how are you guys thinking about that? Like, what is the revenue split between, I mean, basically anytime you call into to base layer liquidity, you're paying out the same base layer revenue to the nodes and the pools that they would otherwise get from a normal swap. So this is like, from that perspective, app layer brings net new business to the base layer. Um, in addition to that, because the nodes are essentially, then the nodes are hosting the liquidity that is needed for your apps, and they're running the computations needed to process your smart contracts. So what's sort of what do they get from that, and what's
Yeah,
sort of
I
what your
mean,
guys' yeah.
it's absolutely critical that anything deployed on the app layer pays for its security, which means paying fees to the base layer, paying node operators, paying bond providers, because you take something like a lending market, and if it in a great scenario grows to the size of Aave, right, and you've got several $billion of TVL, you've got to pay for it, and that's kind of it's non-negotiable really, and so we will make. I think it should be required by node operators and by the community to look closely at the proposals, because what proposals for new contracts to be deployed, and ensure that there is a sensible fee split there, to make sure that the TVL is being paid for. So, for example, and we talked about it's a slight segue to affiliates, but talked about a lending market. So, if I deposited one BTC into a lending market, I've now created $100,000 of TVL into THORChain. These contracts will also integrate with the THORChain affiliate system, and so all the existing affiliates will be able to put a 5, 10, 100 bits, whatever they want to put on top of that borrow fee, and capture it themselves. But there will also be a fee captured by the protocol, which is split between app layer and base layer to pay for liquidity, pay for security.
Just because people, the PTSD of THORFi lending is still fresh, I just want to clarify, RUJI lending will have interest rates and liquidations.
Interest rates and liquidations. And actually, what's really nice about this new passive market maker model is that the passive market makers can provide liquidity into the order book. So let's take BTC USDC, for example. It can provide liquidity to that order book, but it can also participate and be a market maker in the liquidation queue. So there's a degree to which we could process liquidations through an order book, but Orca in the liquidation queue is a really exciting product. And so now we get to deploy the liquidity into both the order book and into the liquidations queue. And because then we now have guaranteed or more predictable liquidity in the liquidations queue, which we haven't had up until this point, our lending markets can be more dynamic, and the lending caps and borrow caps can be dynamic based on what the liquidity in the market is available to absorb those liquidations. So things become much safer, and you don't have to have this kind of manual update of parameters to respond to market conditions.
Awesome. I think the key thing for the audience here, though, is to know that these apps that are being deployed on the app layer, lending, perps, etc., they're no more inflationary, financial engineering. Oh, we're gonna reinvent the wheel because we figured out a new way to do it. That we're leaving that mentality in the past. THORFi is being deleveraged. We're going to deploy this suite of apps using the industry standard best practices and proven financial principles here.
Absolutely, exactly.
The goal here is to literally just provide the lending experience, for example, right? We don't need to reinvent the wheel. Aave style lending markets are proven, they work, they make a ton of money for their Aave token holders. So THORChain can do that, but it can do it with BTC and native Bitcoin, which no other protocol can do.
And it's to go back to the comment about the multiple chain thing. So we met somebody the other week who was talking about how they were trapped in an Aave lending position. They had a whole load of a significant amount of ETH down as collateral, and they wanted to rotate that into Bitcoin, but they're also at a Bitcoin maxi, and so they don't want to. Or A, they don't want to unwind the position, and B, they don't want to use wrapped Bitcoin in order to back that position. And so this is the kind of, like you said, we don't need to reinvent the wheel of how the products work, but the way they are integrated, and this is the absolute USP that building app layer on THORChain does, is that we can build protocols that will allow somebody to, for example, stream swap their ETH into BTC on a position, and the protocol can maybe there's some kind of reserve to take on the potential downside there. But fundamentally, we can allow people to rotate their native assets on lending markets. We can allow somebody to deposit BTC and withdraw USDC on AVAX. It's just like the opportunities are amazing.
Yeah. And then kind of switching gears, I just want to touch on one of the big questions that we get a lot is, how is this is this permissionless? Why does Rujira get to be the first ones to deploy on app layer, and will that be exclusive? Like, is the app layer just the suite of apps that are Rujira, or can anyone deploy on it? And to
Yeah,
that,
I mean, it's the same
yeah.
as THORChain. It's all open source, and actually, the way that we're building out everything is designed to make it the. So I think what kind of like the long-term goal should be about creating a unified, centralized exchange-like experience, but on top of THORChain and on top of DeFi rails. And so everything that's built out, the way that we've designed the interfaces into the signers, into the data layer, into all the kind of key pieces that we know from experience of building out these apps before are huge pain points, and only magnified by the fact now you have to support 10 chains instead of one. It's designed to be a very comfortable place for new developers to want to contribute. So you kind of choose to go and integrate 10 different wallets yourself and figure out how you query the different decimals, and the fact that Atom has 6 decimals on the Cosmos Hub has 8 decimals on THORChain, and unify the whole thing. And then how do I broadcast that transaction? Or you can just contribute to Rujira / app layer, whatever. And we also like it's kind of maybe not from right now, but we have a really good program set up for RUJI incentives for those that contribute to protocol fees. So it's not, there is no kind of fixed team. We are very welcome of new people and all that kind of thing. And any fees generated for Rujira are split with Rune. So there is there's an incentive pot of RUJI that's being used to generate fees, half of which are being split with Rune. So it's a symbiotic relationship.
Yeah. A couple of just like a couple of things that I'll just state for the record that should be somewhat obvious, is that it is open source, and at the end of the day, the node operators have the final say of what gets deployed onto the network. So another team could come along and say, oh, we want to deploy an app on the app layer, and if the nodes voted to do so, then that would be deployed, and then, that could potentially compete with Rujira in the future. But to your point, I think it is important for the nodes to ensure that there is not, that they're not fracturing liquidity across multiple contracts that do the same thing, because the end goal, and I agree with you, should be to complete with centralized exchanges, hyperliquid, et cetera, and provide a unified experience that provides all of the DeFi primitives that that are obvious and familiar to us today. So, I don't want to see multiple lending protocols that do this, are just different clones of sort of the same thing by different teams. That's not a good use of the security budget on THORChain. Um, but ultimately, that's it'll be an ongoing conversation between Rujira node operators, external contributors, and so at the end of the day, it is not a free for all where people can just come in and deploy anything they want. It needs to go through formal THORChain governance. But in that sense, if you are able, and you think you can do it better than anyone else and on any other team who's done, is already an app layer, can do it better than RUJI, you can do it better than Nine Realms, you can do it better than any of us. Anyone can come to the table, and anyone can come into this arena and present these ideas in, in THORChain and in the ecosystem, in the community. And if you can win mind share and you can win over the votes of the nodes, you can do anything on this network. And that is something that is a principle and a theory that I will defend, vehemently. And I've had a lot of people come and talk to me like, oh, why does RUJI get the sweetheart deal? Because they showed up and they built this thing. There's not another team on this planet, in my opinion, that is more well positioned and already has been working on these problems for longer than the Rujira team. They showed up, They built all the COSM, WASM, exec memo, app switching, all the bindings into the base layer. I wasn't going to do that. That's outside of my knowledge. I don't know. I don't know how to do that. I don't. The Strangelove team are experts in Cosmos SDK, X Upgrade, Cosmos Operator, all the things that they bring to the table. But what the missing piece was someone to actually build out the app layer. And because RUJI showed up to the table and are building that, I am, it is my opinion. If I were a node operator, I would say these guys deserve every shot to be able to provide this unified experience, this unified contracting app layer. But at the end of the day, no one can promise that to you. So that's just the caveat that I'm telling to the community. While this is an open system, I do think that RUJI deserves the sort of first mover advantage on this stuff because they were the ones that showed up and they're the ones that are committing their time. And I think that as long as they can find alignment with the node operators on an economic fee split that makes sense for rune holders and also doesn't cannibalize any of the existing base layer, then we'll have ultimate alignment and app layer will absolutely blow out of the water any of the capabilities that THORChain has today. So that's my little spiel.
Appreciate you saying that, Pluto. And I see you, Eridanus, that you have your hand up. But I just want to say that Kujira has a very, very strong community. It has proven products that people love to use. But what they always didn't have was liquidity. And THORChain brings that to the table. So it's really a match made in heaven, which is why I think the deal was struck pretty quick. And Hans, the team, JP, and the team found each other pretty quickly and saw the mutual benefit. So yeah, a lot of users are hopefully going to use all these different contracts, all these different dApps. A lot of builders are going to come to the ecosystem, building on top of this. We already have some in the Kujira ecosystem that we're meeting on Friday. Again, show up if you're here. But yeah, this is only the beginning, guys. So yeah, I guess that's an update on the Kujira side, unless there's any other questions. Eridanus, you have your hand up, of course.
Yeah, sorry, I know we're reaching an hour here, so don't want to take up too much time, but one question that Hans, you touched on a little bit was talking about how apps on the app layer will have to pay for their security, basically contribute to the underlying security budget of THORChain, which is basically bonded rune. So I wonder if you could just touch on that very briefly and just talk about, is there going to be other kind of primitives that will allow apps to provide security and maybe even outside users to stake rune into the security module or the bond module? What do you think about that? Is there any ideas there?
So actually, we were just talking about this earlier. And like I say, smart contracts don't have any privileged access. So a smart contract is an address. An address can be whitelisted as a bond provider for one or for multiple nodes. And in a human world, I could find 100 people who each had 10,000 rune, and I say, right, you guys can all pull them together, and I'll bond it in one go. And then every week I'll send you the rewards that we've got. And all the app player does is allow you to kind of make that trustless. And so there is an infinite world of design possibilities here, and these things can work in multiple different ways. But there is one of those things that we can do is to create a smart contract that basically allows anybody to deposit rune, and then there is some logic that determines the bonding and unbonding and whatever schedules of that. But it makes the kind of the bonding accessible to small holders and no more DMs to Telegram holders or whatever.
Nice. Yeah, that'll be huge, because I know a lot of people are looking for a way to stake their rune in some way, and this would actually be contributing your rune to the security of the network, which is great. So
and I think something like this would also be like a liquid stake thing, so all the rewards would be just rebonded.
Awesome.
Cool. Let's move on to Q&A, just because we've already been here for an hour, but I hope we covered at least most of the things that we'll be working on in 2025. So yeah, after base, the next thing up is Solana. And then what else is going to be in release 3.2? I'm not sure anything massive. Just some more groundwork for the app layer. Every PR, every release, we're committed to just getting more and more of the app layer PRs landed until, hopefully in the next month or two, we're ready to start that process of formal governance to decide, which are the first set of contracts that will be deployed. But hopefully we can get you guys unblocked soon, get the app layer deployed, get Solana shipped. And then, yeah, just more, faster block times, more efficient,
More,
blocks.
faster, better, more TVL. We got this.
Yeah, for sure. All right, let's open it up for questions. Who wants to come up?
I do. Can I ask a question, Pluto?
If you ask about rune price or any of that kind of stuff, we're just not going to answer, so don't bother.
No. I want to go back to lending.
I'll be right back. I think my Spaces is bugged.
Can you guys hear me? Hello?
I
Yeah,
can
go
hear you
for
just
it, Ken.
fine. Yeah.
Okay.
Hey.
Yeah, we can hear.
So for now, do nothing. Are you saying just don't do nothing, period, and just leave it as is? Because I think that's okay with savers, and if anything, at some point we can eventually just eject them from the pool and just be done with it, and it's all fair, it's all fine. But with lending, how do we actually unwind it? If you've got these indefinite loans, there's no reason for them to close. How do we deleverage those? How do we eventually get rid of them?
I think you don't. I think you just wait. And if you if you change the rules of the system, you give people a reason to close, and then you end up in a situation where, at the literal bottom, or the local bottom rather, you create a FUD event and everyone goes and closes, and there's talk of death spiral and all that. It's just like an unforced error, like literally just people need to just not touch it, let it
Well,
unwind naturally.
I think trying to close it out. I think it can be done fairly. If anything, we can incentivize people to do it. They could be incentivized to close their loans. So I think the real.
You mean like when Rune BTC is higher, for example, than it is now, or when it is some point in time that is considered optimal, then you give people an incentive to close then, so that there's minimal Rune mint. Is that kind of what you're saying?
Yeah, exactly. Because we want these loans gone. We don't want these sitting here on the books for the next 5 years.
So who decides that? Who decides when Rune BTC is at an acceptable level? What is that acceptable level? How do you code that?
That's up for debate. First we have to agree that we need to unwind it somehow. And instead of hurting people, we can try and incentivize people to unwind sooner rather than later. Because to me, in my opinion, the problem with lending isn't the debt per se. It's the fact that it's variable and we don't know when it's going to mature. That's what the market, the 200 million runes sitting out there, is worried about or wondering about. And
what 200 million rune? Where do you get that from?
The passive holders. I mean, any passive investor, anyone who's
right.
So, especially someone who's new to THORChain and wants to buy rune, they're going to look at it and what's going on here, right? What's going to drive the price up? What's going to drive it down? And they're going to see this liability that's like not defined at all, and they're going to they just assign crazy assumptions to it, which those craziest, and I mean on paper, they assign crazy assumptions, which means that increases the size of liability, which decreases the value of rune in their eyes. So this lending just sitting there, just hoping it's just going to go away, I don't think that's a viable plan in the long term. I think we need to put our brains together, find a way to encourage people to close it out at a good time for us, so kind of we all benefit, right? But I don't think we can just sit here and just hope it goes away. Especially even if somebody forgot about their loan and they've lost their keys, whatever. I don't think it matters. I think we still have to find a way to close it out, because we just don't want that sitting on our books. We need to just find a way to just be done with it and move on.
Yeah, I mean, I just don't know how you do that in practice, because like, what are you gonna? You can give someone the keys. You can appoint a DAO who's in charge of figuring out how to time the market in their infinite wisdom. They know that this Rune BTC is ratio is better than yesterday's, and so now they're going to do a multi-sig transaction to vote to temporarily tell people that they can close loans at a lesser at a debt multiplier, for example. I mean, you could do that, but who in their infinite wisdom is able to determine that today's Rune BTC ratio is better than tomorrow's?
Well, us, the nodes, right? So it can be, this is just an idea. I'm not saying this has to be this way, but let's say we're in a position where Rune is truly outperformed. It's doing really well. It's strong. And, the nodes why can't we all just agree to just give everyone their collateral back? Just know that the address is done. Boom, it's over.
You could do that. I mean, yeah, I mean, you could do that. So we're saying like maybe we could put in the code in the protocol now, such that if and when the nodes feel like activating that, they could potentially vote to do it. I'm not opposed to that. Just so that
Yeah.
you have the lever if you want it. If Rune does 5x its Rune BTC ratio, like, sure, yeah, close all the loans, just keep the debt and give everyone their collateral back. They just got a bunch of free, basically, since the LTV is 50%, they just got a 50% free money on their collateral. That's one way to do it, I guess.
And again, I'm not saying it has to be this way, but I think the important thing is we should leave it alone. And so, this is fine. We'll forget about it. It'll take care of itself. I think we kind of need to brainstorm in a way on how can we end it, close it, that's equitable. Even people have been talking about we're gonna have app layer and loans can move there. Well, still, how do you force people to close their loan on THORChain and move to the app layer? It's a bit of a pickle. But I think we need to figure out to end it at some point, not just hope it goes away.
I think if you look at the rate of redemptions, it's pretty consistent, and especially you look at the rate of redemptions, you look at Shaver's withdrawal. These things are happening pretty consistently over time. THORChain again just went through a big stress test of a lot of redemptions at one time. Obviously, that's not the ideal way to do it. I think like we wait 3 to 6 months, see where we're at, because loans are being closed, savers are being withdrawn. This is kind of like the best way to do it, a slow trickle. I do agree at some point we might want to like incentivize people more, but I do think it's something that we can think about, very carefully. We can have a long-term discussion on it and see where we're at in 3 to 6 months. A lot of it might be gone on its own.
Yeah, that'd be obviously fantastic. Just naturally does trickle down. Absolutely. Yeah, I agree. All right, thank you.
I think one thing that's important now is just expressing confidence in the system and the fail safes that we have in place to like prevent any kind of worst case scenarios. I think it's important for us to signal right now that we're confident that the system is working in the way that it's designed, and like there's no need to do it, make an unforced error like Pluto mentioned. But yeah, I think like if we were to do something like that, definitely like what you said, more carrots than sticks is the right way to go, and like something that we can revisit as things are naturally unwinding by themselves over the next over the next couple of months, in a year from now. Like there's some period in time where we can like revisit and how to just give everyone back their collateral for free or something like that for sure. But I think right now, just let it play out and just have confidence in the systems and fail safes that we have in place.
All right, thanks, guys.
Or anybody else that wants to come up, can request.
Boone, yeah, go ahead.
Yeah, I think.
Yeah, I just wanted to follow up with that security discussion that we were just having. Yeah, what is the plan for how THORChain will handle the security budget, given that like Rune is a kind of volatile asset, and like let's say, there's a lot of demand for secured assets. There's a lot of wrapped BTC sitting in Rujira having collateral as loans taken out against it, and it's like 90% of the security budget. If Rune falls 50%, then the budget is overblown. So like, what is the plan around that kind of concept?
Yeah, it's a good question. So right now the plan was to what's it called? Demirage. So the plan is that when we approach the point at which the value of secured assets plus base layer liquidity begins to exceed the security budget, then secured assets will pay Demirage, which essentially we can go into it a bit later, but basically that's the main thing is applying an interest rate to incentivize people to contract that.
Yeah, I was the one who kind of brought up the idea of Demirage. I think it makes sense, but I think it still makes sense to have it like always there rather than only when it's close to the security budget.
That's been advocated by people on our own team. Like we were having this discussion internally, and people just keep saying like, well, the easiest way to do it would be to just apply a fixed percentage rate to all secured assets. That way, that ensures THORChain is always profiting off of app layer, secured assets on the app layer. I think when you get down to it, though, like from a user experience perspective, have you ever used an order book where you place a limit order and then you cancel it and you only get back 95% of your order because it was just sitting on the order book for a while? I mean, maybe that is a way to incentivize or disincentivize idle capital, but it certainly would not. I don't think that we're going to be able to make a case for competing with like the hyperliquids of the world with such a design. So I think we have to be a little smarter about it.
Yeah, one thing I want to bring up, just and nobody crucify me for this because this is just like a moving like not completely disregarding economic security, but just I think acknowledging the fact that economic security also is sort of a meme and is sort of just a concept that was created. And just because like the total value of assets secured is below the stake of the validators of the network doesn't immediately put all of the assets that are being secured at risk. Like to actually civil attack THORChain, to actually execute some kind of attack, you need to buy hundreds of millions of Rune off of the open market, which obviously just doesn't exist, from the liquidity pools on THORChain itself. Like executing some kind of attack, like, so I just wanted to demonstrate a little bit that like economic security is like a bit of a meme. So like I think it's okay to relax the standards around that a little bit, just to actually get some more capital efficiency on the network. Because like there's all these
our competitors don't care. Our competitors are one guy with a multi-sig, three guys with a multi-sig.
Or even less than that. Intense protocols where it's literally just one guy. It's back to 2017 Shapeshift. That's like what THORChain's up against right now, is one guy and a single sig. So further handicapping ourselves and running the next marathon with a weighted vest on just seems like we need to not completely rush past economic security, but also acknowledge like, where it has its place and where it doesn't. And obviously like that, just monitoring the state of the network and the health of the network and like reacting to events as they happen is probably just like the best, actual way for us to move forward without like blocking anything and, that kind of thing. Because having passive liquidity just sitting there on order book is totally different than having like open loans which are paying interest and things like that. Like not all contracts are created equal in this matter, and there's really no one catch-all way to
Express
really
that.
yeah, exactly.
Yeah, and just to tack on here, I'm really excited, and why I've come and joined the THORChain team, and I've doubled down on working with you guys is, I think THORChain has a unique opportunity right now to expand on its position as the best place to trade Bitcoin in a decentralized way. And we mentioned some competitors on this call, and like we need to get more leverage out of the THORChain base. And the easiest way to do that is to relax the capital requirements. This is a classic way that you can expand a bank, and like this is the same way we should expand THORChain. We have been, as a community, incredibly conservative with our capital requirements for a long time, and that's been a strength of the protocol. But to take that next leg up and to see the type of growth that would bring the type of asset price appreciation that a lot of folks on this call want to see, we need to relax those requirements, bring in more capital, and really see that trading volume grow. And that's what I'm here for, and I know that that's what the team here is for, and I think we're all stoked.
Yeah, you're not gonna freaking risk like having to look over your shoulder for the rest of your life. Half of the node operators are like semi-docs now anyway. Like they've been around for 4 years. I recognize the same operator addresses, the same Discord handles. Like it's like we know who these people are. They're not gonna rug for a 0.25x or even 0.5x payout on the amount of value they've already bonded. They've got tens of millions of dollars bonded. They're long-term rune aligned. They want to see this network profit, and they want to just basically live off of the staking rewards and income from THORChain for the rest of their life. They made excellent bets on this network, and they could cash out now, but they could also just continue to reap the rewards, and live off this. And it's a business. THORChain is it's one of the most profitable L1s in existence. You look at all these other L1s, someone please post that damn graph where it's like the cost to fees. I mean, THORChain's a fucking behemoth. It's making 20 to 40 million dollars a year. And most L1s that are like worth billions of dollars right now make like 200K in fees a year. It's like a joke. Like THORChain is an extremely profitable business, and none of the node operators are going to risk that to rug, some rug the L1s. It's not. It doesn't make sense. The game theory doesn't play out. So I think we could go 2 to 1 on pooled assets or secured assets to security and still be safe.
And there's hundreds of millions
Yeah,
of space. And
strongly agree.
economic security doesn't acknowledge liquidity of Rune at all. It just acknowledges the current price of it. So like to actually execute some kind of, like if you were just looking at the raw numbers, like, all right, yeah, like at the current price, like liquidity could go over the security budget or something like that. But to actually like get enough Rune to do that, you're buying 50 million runes, 60, 70 million runes to do that. Like, it's an insane amount that doesn't even exist on the market.
Yeah.
So like
economic security is a meme. Like this is broadly acknowledged. The blockchain research community has kind of come around to this too. And yeah, even newer bridging designs just don't even take this into account. And I think that there's been a lot of good that's come out of the culture that we've built around this economic security meme here at THORChain, and like learning to live within a budget and all of those things I think have really helped us grow as a protocol. But to take that next step, we need to relax these requirements and like really pump the volume.
What was the revenue liquidity fees of THORChain in 2024?
30.4 million.
Okay, cool. So that makes us more profitable than Linnea, Arbitrum, BNB Chain, Avalanche, Ton, and Injective. And that makes us right behind Base and Solana. Like, for Christ's sake, guys, why is this not a $10 billion protocol right now?
We gonna do it, Pluto. That's what the goal is. That's what the moon mission is here. That's what we're all here for.
I got like fuck 10 billion, 20 billion. What the hell?
Sorry, everything we're doing is to make the network more useful, increase profitability, ship new products, and get it in front of hundreds of millions, billions of users one day. Like that's everything that all the teams are aligned on doing right now, and like everyone's focused on their different things. Like 9Realms, we're doing we just put on base. We're gonna look at liquidity, like making dual liquidity better. Strangelove has their focus on adding new chains and decreasing block times. The RUJI team is going to make this entire DeFi suite that pays fees to the base protocol. Everything is to just increase the amount of fees that THORChain is actually earning and taking in. And then obviously like all the integrations work, getting it in front of hundreds of millions of users, which is it's happening. Like it's been playing out for the last couple of years. This year, like we really want to land the last couple big wallet integrations and just like kind of complete the Infinity Stone gauntlet. Like we just need to just get every other major wallet and protocol to integrate, and including institutions, which is like all stuff that we're all focused on.
But Pluto, I'll answer your question. It's because of the liabilities.
Well,
right?
that
weighs on the valuation.
It's also because certain prominent members can't help but like actually shooting ourselves in the foot every time we gain a foothold. It's like, yeah, I just made it to the top of Everest. Like fucking, let me. Fuck, dude. Anyway, it's all good. It's all good. It's under control.
We all agree on that. But that's my point about we need to come up with a way equitably to get rid of lending somehow, because that weighs hugely on our valuation. So we get rid of all our liabilities, then that's when Marin will really start outperforming.
Before the conversation moves too far past the whole security thing, I just want, like, I don't disagree with a lot of the arguments that have been made, but it would be nice to see, like, if THORChain is changing its security stance, it would just nice to see that laid out, like in a document or whatever. Like, what are our assumptions? Like, I mean, one of the things that I always really liked about THORChain is the nodes were theoretically anonymous, and I know in practice not so much, but like, that makes it resilient to a nation state attack. And if a lot of our nodes are getting doxxed, that does change the base like security stance of the network. And if we're just changing it, it'd be nice to see that laid out somewhere. Not that I disagree with pretty much anything anyone was saying.
No,
we've got a retreat coming up in Austin here in a couple of weeks where all of the core teams are going to be together, which we had planned last year, and it turns out the timing is kind of perfect, getting everyone together in person. And I think that's one of the documents that we could agree on during that time, and the core team could kind of come out with a stance on that. Pluto, is that something you'd be interested in?
Yeah, 100%. I was just going to say that can all be wrapped up in an ADR. It just needs there just needs to be two memirs that nodes can vote on. One would be the interest rate or the demurrage fee, and then the other would be the ratio of pooled plus secured assets to security over which you start applying that. Very simple. And then we can just let nodes decide how much risk they're collectively willing to take. There's a ton of governance stuff that we want to do. Like, also we want to scale back the outbound delays and stuff. So all of that is just like, as soon as we get all this like fucking FUD and drama behind us, we're gonna just pick back up. Like, I've just been focused on shipping base, and my team is gonna be focused on shipping Solana. Once we do that, like, getting the base layer optimizations in place, which includes those outbound delays, which includes all of the backed up governance and just administrative stuff that has kind of fallen by the wayside. I plan to do a bunch of stuff around fixing like documentation and basically just documenting all of these things that we all kind of have informally been in agreement with. Like, as we've only had one team so far, it's like kind of easy to just like bounce ideas around and kind of come to sort of like internal consensus and you know, as the community grows, as the project gets bigger, like that no longer becomes acceptable. So I take it upon myself to start to outline more of these things more formally, both through documentation and through the ADR process. You know, we don't even have like a standard charter for like releases, governance, all of that. We've kind of just shot from the hip for a long time for with all of this, and so my promise to the community is that that will all be done a lot more, you know, a lot more rigorously in this coming year. But there's just key stuff and that we want to ship first. So we're still in building mode right now. I just want to get the app layer out, get Solana out, and then take a bit of a breather, and then reassess some of those formalities.
Cool. Yeah, it looks like there's no more questions anyone has. So we can start to wrap it up here. Last thing, like I kind of wanted to run back to is Base, which is getting launched right now. You can see THORChain profile pictures is changed to Coinbase colors, and we have an opportunity here to release a new chain with none of the old overhang, no savers on Base, just pure uncut Colombian dual LP. That you can participate in. So I don't know if you can LP on THORSwap like right at this very moment or on Shapeshift. I know they're all testing it right now, but once it's live, once it's live on some front ends, and we'll make a quote unquote official announcement. And it'd be great to get everyone's support, sharing that, getting all the front ends integrated, and then just integrating more closely with the Base community and obviously like the Base team, because like we all know like what the targets are, like wallets wise, and where we really want to be, and this puts us like one step closer to that. So like now is the chance to really leverage like the community and the opportunity that we're given here to bring this into like a big wallet integration, to bring this into like a bigger community integration, and just more closely align Base and THORChain and all the community together. So you can really use everyone's support when we actually finally make the announcements, just getting the word out there and just involving the Base community with the launch. And that's what we're doing on the back end, working with the teams and everything like that. But the announcements and like officialness of everything will be out like really soon. So just counting on everyone's support to make it a big success. Looking forward to Base a lot on THORChain. I think it's going to be a big chain with a big impact, and we have the opportunity to go in front of like millions and millions of users here like very quickly. So just wanted to make sure everyone's like on the same page with that.
Did you just say THORChain to the moon?
Let's do it.
Cool, guys. I also have the big thanks to the community for dropping by. This has been one of the bigger spaces that we've had in a long time. So like a lot of people joined and stayed for the whole time. So thank you for sticking it out.
200.
Yeah. Thanks for sticking it out through, a lot of the technical discussion and, for the preview of app layer. I know we can kind of get into the weeds a little bit, with implementation details and but I promise you guys there's some really good things coming this year with that. And yeah, I just appreciate everyone for, all the voices of support throughout, this time. I know that it's not always optimal how things play out in decentralized governance and decentralized networks. Like it's chaotic, and that's because there's a lot of different people with a lot of different opinions, and those people, have valid opinions. But it's our job to sort of try to filter through that stuff and give the community reassurance that that there's steady hand on the wheel and that we kind of have. Everyone has their marching orders. Everyone knows what they need to do. We've got 3 really great teams at the table here, all working and aligned, toward the same end goals. So we look forward to delivering all that stuff for you guys with a nice, neat bow on it. Thanks.
Hell yeah, guys. Last thing is if you can't catch these spaces live, we always upload them. They go on YouTube, they go on Spotify, they go on wherever you get your podcast. So if you just search THORChain Weekly Live or search THORChain on Spotify or wherever you get your podcast, you'll be able to see these even if you can't see it live. And obviously, like we do these on Twitter, you can come up and share your thoughts, ask us questions or anything like that. And we're obviously like very involved in the community otherwise. But yeah, we're gonna keep a more regular cadence on these, aiming for every other week, and we're gonna get back to it this year and ship real hard. So thanks everyone for coming out. Thanks to the community. Thanks to 9 Realms, RUJI, and Strangelove for coming up. Appreciate everybody.
Later.
See ya.
Cheers.